The underlying fundamentals of the market continue to show weakness. And yet, the market looks through those rose-colored glasses and continues to rise. We got lots to talk about. Stay tuned. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget you click show more for additional information and links. Also, if you find this video of value and are looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing. Today's agenda, weekend wisdom, big charts, lots of new charts today. What keeps me up at night? And what's on my radar? So first, weekend wisdom. If you're a new viewer, put out a video last weekend about inherited IRAs. I've had a great response. We'll have a link up here. Now, let's go to the big charts. All right, first up, let's take a look at the daily charts and what do we see? Couple things. We've talked about this. Well, we finally had that breakout, right? We keep on failing here at these levels, and now we have a little bit of a breakout. Now, what do I see? First off, this is real-time Friday morning. We're 28.18, which would create a new high. So that is actually bullish for the market. Our most recent was over here at 28.15. From there, the big thing is volatility. Below 13 now, as I've said, below 15 is a good sign on when to get into the market. I look at volume, still anemic. That tells me still not seeing a big push there. We're about 2 billion shares a day right now. And in the past, we're doing about 2.5. So volume's still a little bit anemic. And then we'll talk about, are we seeing that thrust that you want to see in a bull market? So next up, same view. On a monthly chart, I just want to show this because of the death cross, golden cross, right? Death cross is when 50-day goes over 200. Golden cross is when the 50 goes above the 200. And we talked about this a couple weeks ago, how we were still kind of flat. Well, now it's really starting to surge up, and we're getting very close. We're only about 50 points from a golden cross, which would be positive, very positive for the market. So right now, short-term signal is still neutral. Why? Not seeing a lot of breadth, but down here, okay, is going to be your momentum, MACD, and it's just about to cross over. If we get confirmation there, then short-term, that will go into a positive signal. But neutral today, with a bias to the positive side. Next up is your weekly chart. Any changes? Well, not really. Down here, it's still positive. We've had a positive crossover. You know, we've talked about this in the past. Here's our trend line from 2009. And still really close, but we still haven't broken it yet. So that's one of the reasons why I am neutral. The other thing is right here. So here we hit all-time highs right back in February. And you can see relative strength was really strong. Okay? Then we hit it again in August, but then relative strength was lower. So that's called negative divergence. And now, here we go again. We're up here and we're even lower than we were before. So we're not getting that strength. So right now, until I see that cross, we are neutral on the midterm. On the long term, no change here. Same thing. The main thing I'm looking at is down here. We've had a MACD, momentum, negative crossover, and we don't get a lot of those. So at this point, long-term view is negative. So here we have some new charts. New to our viewers, not to me. I look at these on a daily basis, and these allow me to view whether or not we're getting a bullish or bearish push. So the first one up is our AD%, okay? Advanced decline. So advanced issues minus negative, right, the declines divided by total issues. So if it's the S&P, how many positives versus negative divided by 500. Pretty simple to understand. So right now, when I look at it, I'm looking for 2 of 3 to give me a bullish signal. Now the first one here is going to be your S&P 80%. Now you can see it. If I go back to the beginning of the year, okay, you could see that surge above 30%. That's what we're looking for. Now at this point, we haven't seen it again. So we kind of hit our top and we've had a series of lower highs on the S&P. So it's not positive. Next we have mid-cap, same thing. We're down to 1.6. Advanced decline minus total issues. Then I have small caps, same thing, and then NASDAQ 100. So here, all of these signals are neutral, neither positive nor negative, so it's not giving me that sign that says we're in a bullish trend line right now. So before I get into the treasury charts, I do want you to understand that I'm fully invested right now. I just have about 5% in cash. I might be in different sectors. We'll get into that. And the reason I talk about this pause, obviously I showed it on some of the charts, but there's always been this comment that the bond market is smarter than the stock market. Because when the stock market goes up, it's going up with the anticipation that earnings are strong, right? Growth is coming. But if that were the case, treasury yields should be going up. And that is just not the case. So let's take a look. The first thing is, now this changed from last night, but treasury spreads, right? 10-year minus 2-year, we're down to 0.17. All right, we see weakness there. But this week, we kind of went down again, and everyone thinks it's going to go higher, but we got a CPI number, which I'm going to show, that came in weak, and that's driving us down. Now, the next big thing when it comes to treasuries, we're at 2.63 on the 10-year. So here's a chart. Is the bond market smarter than the overall market? So I have a couple things here. First up, your 10 years in black. Okay, you see it and it's going down. Now generally the S&P, like I said, and the bond market kind of works together. And down here I have the correlation of the S&P and the 10-year treasury. So correlated means you move lockstep. In a lot of cases, we're at a 1, which means 1 to 1, they move together. But look at the divergence now. I mean, when I see this big divergence here, is in fact the bond market telling, screaming something different? Time will tell. So what keeps me up at night? As I always say, lots of things, but here, the fundamentals. Now, I've always had my process has been momentum, the charts, and I really have gotten into macro data in the last 6 months because as we're getting to the end of the cycle, you really got to get into this. Now, when you look at these fundamentals, it's like a dark cloud above us. First up, S&P, earnings per share and sales growth at lowest level since 2016. Housing starts, existing homes, lowest in 2 to 3 years. Atlanta Fed projecting 0.3% GDP growth. U.S. yield curve partially inverted. S&P off to its best start since 1987. There's a disconnect there. And then last week, Fed Williams said financial conditions have partially reversed from 2018. But a lot of that has to do with the Fed. So the Fed's admitting that they are moving the markets. That is not their job. Their job is monetary policy. So, some of the things. U.S. federal debt versus GDP. Okay, it's never been this high. Never been this high before a recession. This comes from Lance Roberts and his team. Great piece. Retail sales. We talked about how ugly it was in December. Came back even lower than that, had a little bump in January, but it's still very low. Some of these numbers are catching up because of the government being shut down. I talked about this, CPI, good thing, right? Inflation, nowhere to be found, and this is what the Fed's looking for. How about this? Federal government receipts, 12-month rolling average year over year, declining. Now you can see each of these gray lines, of course, are recessions. Declining because the sale revenue is not there. This just came out this morning. Industrial production came in weaker than expected. I created this chart this week, ironically. Each time, right, good leading indicator, and you can see we're falling over here, industrial production. Each time that's happened, we have seen some type of meaningful correction. How about GDP forecast in Europe? Whoosh, the trend is not your friend. And next up, earnings. It's all about earnings. You buy based on future earnings of companies, and we're looking at a minus 3.4%. First quarter. All right, first up we have utilities. Pretty obvious. You can see that move there. Worked very well for us. Now, utilities are considered a defensive sector, but with rates being so low, and again, giving us different signals, utilities have been a really good place. Not surprised. We'll probably consolidate here, maybe before we go on to our next high. Same thing goes for REITs, right? When you take a look here, same thing. We've had this push, consolidation, move up, maybe another consolidation, but REITs have worked very well for us. Gold, okay, gold is one of our larger positions right now. We've had a couple things. One, we had the golden cross, 50 above 200. All right, now we got back into gold over here in December. We had our run up, we consolidated, okay? And this is what happens. Then you break out again, you consolidate, okay? We've had a little back. So we're bouncing around right now, but I still like gold long term. Now the next one, which is our most recent ad, is oil. Now I've had a question from a viewer. Where do you go with oil? It's a lot of different places. MLP, Master Limited Partnership. Drillers, suppliers, right? Or you can buy oil in an ETF. Now for me, I do it two ways. I'll go into the big companies in an ETF, and I will do oil on both, but primarily the big companies. Okay, so what I'm looking for here, all right, we got in a couple weeks ago over here. Had to break out, consolidated, and then we're starting to move higher again. That's a pretty good move. I like that move. So why and when do you look to get into something like oil? Down here. This is OVX. OVX is oil volatility, just like the VIX, okay, for the overall markets. When I broke below 30 on the OVX, that's always a good sign for oil. So wrapping things up again, our fear and greed. This week we're at 60. 2 weeks ago, 72. Interesting, coming down a little bit. And our indicators, once again, we have two neutral, possibly one turning over, and our long-term view is still negative. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.